Thanks, Graham, and just like to say, let's fix that up. If you ask someone at CBH about the future of the Wheatbelt, we're extremely positive, and we're also extremely positive about Saturday at ANZ Stadium. So I get some balance in the argument up here. Probably the biggest reason why we're so excited is we're in a new decade, and we think we're in a new decade of growth in wheat that's growing in WA and especially in the Wheatbelt. We will see massive change and massive investment spent in the Wheatbelt over the next 10 years, especially from CBH. So it's extremely exciting times. We've seen two 15 million tonne crops in the last 3 years, and this crop's looking to be well above average as well. So the last 10-year average is 10.5 million tonnes. We could be another 30% higher than that again this year. So we're extremely positive and bullish the production market, and despite the global signals potentially not saying that there's that demand, we are seeing that demand through our system to export that grain within every 12 months for the last since wheat deregulated in 2008. So just to run through quickly a bit about CBH and the supply chain. We are a non-distributing cooperative, so we are a non-for-profit. We invest everything that we make back into the network. We have 4,300 members. There's about 10 to 15 million tonnes of production. We are the largest co-op in Australia. Bit about our network: 197 sites, 4 ports: Geraldton, Albany, Esperance and Kwinana. And we've got 20 million tonnes of storage throughout that network. I'll show you a map how extensive that is very shortly. Transport and logistics. Very recently we've invested in rail very heavily, $175 million investment, buying our own locomotives and wagons. That's how much confidence we have in this export supply chain, buying 30-year assets to move those tonnes. We have our own marketing arm. We market on average 6 million tonnes of grain out of Australia in total. We've now moved into North America. We're into the Ukraine, Russian area. It's high risk, but we're there. And we export into Asia, Middle East and Europe. We are the largest grain exporter in Australia. In the shipping, we load 10 million tonnes on average per year. This year we will do over 14 million tonnes through those 4 ports, which will be a record by nearly 2 million tonnes. We've got our own stevedoring arm, and we charter 2 million tonnes a year on average. This year we chartered about 5 to 6 million tonnes of vessels directly. A lot of people don't know, but we do have a 50% share in a lot of flour mills in Vietnam, Indonesia and Malaysia that has a 1 million tonne demand. 70% of that is sourced from Australia. That's about drought-proofing our business and finding different ways to bring revenue streams into our cooperative so that we can keep our fees low. And then our customers, the flour millers, the maltsters, the feed manufacturers and the food processors, we're building long-term relationships with these end users so that they keep buying West Australian wheat. As you can see, and you'll see as you drive through the Wheatbelt, just about every town that you go into there's a white roof or a concrete silo, and that is CBH. We have 197 sites. Probably the interesting thing about this network is that it is getting old and it does need a revamp. And we will be taking a 5-year plan to our board, executive and our board at the end of this year to revamp that network, and it will look a lot different. The last time the network was revamped was in the late 60s, and we went from 315 sites down to the 197 odd that we've got today. We simply cannot keep that network sustainable the way it is, and so it will change. So there will be massive investment coming, and that map will look very different in 5 years' time. There are 4 key things that we are trying to achieve as we shape that network. The first one is having the ability to get the crop off the farmer's paddock and into the CBH system in 21 days. And I'll take you through some stats of where we're at today, but that's our target, 21 days. Our second target is to make that network sustainable with $50 million of annual maintenance. Today we spend about 85 on the network and it's not touching the sides. So it will have to look a lot different to do that. We want to give that the ability to get the crop from that network to the ports, have the capability of moving 18 million tonnes in 12 months. Today, the capacity of that whole network supply chain is probably about 13 million tonnes. And finally, we want to try and keep our fees low to our growers, and we're targeting to try and do all that and keep our fees down to at $25 a tonne for the storage and handling fees from the receival point to on the ship. So some pretty bold targets. Some will have to give, I'd imagine, to achieve where the priorities are, but probably the two main priorities that growers are telling us are the 21 days and 18 million tonnes. Give us the capacity to get the crop in and get the crop out so I can get the best prices when the market wants it. Just a little bit about showing where we are in the standings of Australian exports. We are the largest. You can see there's some pretty big names. If you're not involved in the grain industry, they're the big global players of grain markets that stand in between growers around the world and markets around the world, and they're essentially trading grain. And they all want a piece of the pie in Australia. Australia is one of those frontiers that they could never get into before the AWB got dissolved, and they've been here for the last 5 years. The demand is so strong that recently we offered port capacity for a 3-year agreement, and the demand was for 14.6 million tonnes of port capacity on a take or pay basis. Our average exports is 9.5. So they want 50% more capacity than what their actually crop is grown in the state, and they're willing to pay for it. So that's given us signals to invest in that supply chain. These are our flour mills. Again, this is about another revenue stream, about feeding Asia, about bringing all the revenues all the profits that come from this business come back and try and keep those storage and handling fees down to $25 a tonne. So you can see this is basically the supply chain from our receival points, that network, through to the ships. You can see we've got massive overcapitalisation of storage, 20 million tonnes to receive an average of 10.8. You ask growers how we received the crop last year, nearly 16 million tonnes. They said it was one of the best harvests ever. So we've got plenty of grunt in that space. We've been investing in that space for 80 years. 4 ports, they've got the capacity to pour grain over the spout of 50 million tonnes a year. They've got huge amounts of capacity to load ships. The constraint is right there in the middle, the ability to get it from upcountry to port, and that's where that investment's going to come. Where's the growers' priorities? So we were out at a grower's farm at Darren last week. He is about managing risk. As soon as that crop's ripe, he wants it out of the paddock and in the bin, no more risk, and he's passed the risk on to CBH. And so it's about how fast he can get that crop out of the paddock. You can see the steepness of that line is getting steeper and steeper, weather permitting. They want to get the grain off the paddock and into the bin as quick as they can. Why are they doing that? Because sitting in the paddock, and this is probably quite conservative, got a few growers and they'll probably say it's a lot more than that, but paddock grain losses of 1% in weight per day. If you're a 10,000 tonne grower, 100 tonnes a day just evaporating into the sky, $25,000. A grower's biggest investment on farming capital is in the harvester. I think the harvester's now going for about $650,000, and they use it for 5 weeks. They do that to get the crop off and get it in the bin. So you can see that the capacity of harvesters have doubled in the last 10 years. So it's quite extraordinary how that's grown, and the value's there for that to grow. We're trying to match that with that massive network about trying to keep pace with the grower. The average truck size in 2005 was 30 tonnes per truck. In 2014, it was 40 tonnes per truck, so it's been a 30% increase in a decade. We can expect that to continue to grow, and in 10 years' time, it wouldn't be surprised I'm sitting here saying that it's 50 tonnes per truck. So the growers are getting contractors and bigger trucks to get that crop into the bin. Where's CBH been focused? We've spent over $850 million in the last 10 years on the receival network, and really that's been focused on getting that crop in. Like I said before, our target is to get the crop in delivered in 21 days, and that's 90% of an average crop. In 2004, we had a 14.6 million tonne crop. We thought it was an anomaly, the perfect storm. That crop got delivered in 40 days. Last year, we broke the record of that crop by well over 1 million tonnes, and it was delivered in 30 days. So the ability to get the crop into CBH, and where the value of that investment is 10 days for the whole industry. And you could sit down and work out 10 days times the value of that crop and how much that was worth to the whole industry. Our target's 21 days, so we're still 30% away from this target. So we'll continue to invest in sample sheds, weigh bridges, off-take abilities, storages, to be able to get that crop in 21 days, because there's huge value there for growers and there's huge value there for the industry. This is a graph I mentioned before, the demand profile of those international traders. The green line shows the typical profile that the market wants to ship the grain out of Western Australia. So you can see in November it's bugger all, and from January through to about July, they just want to get the whole crop out. This is a huge change for our supply chain, huge change for the Wheatbelt, whereas before that, the AWB used to market everything relatively flat. There was a few peaks and troughs, but it was shipped over a 12 to 18 month period, and it was relatively flat. Now the market wants to ship pretty much the whole thing in the first 6 months. So essentially the crop size is, it's growing, it's getting bigger, but we need to have the capacity to move the whole crop in half the time. So it's essentially the same as doubling the crop size in WA from a resources that you need to move the crops to port. So that's why our 18 million tonne target, people say, oh, you haven't grown an 18 million tonne crop, why do you need that much? It's really about moving 9 million tonnes in 6 months, which is the average exports. And primarily the number we want is 2.2 million tonnes per month early in the year for about 4 months. In 2004, we thought we were going great guns. We did 1.56 million tonnes in 1 month, and that was the best month we did in that year. In 2014, this year just gone, we did 1.73 million tonnes. And if you were down in Fremantle Harbour, you would have seen boats lined up to Rottnest, ready to go under the spout. We need to take that to 2.2, so that's going to mean massive investment right from berth side all the way through the supply chain back to where we load trucks and trains. And that's where our focus is going to be in the next 3 months. So what does the future hold? Growers will continue to manage risk and maximise return, and they'll continue to invest in headers, trucks, and getting it off as quick as they can and into the bin. We'll continue to invest to get the crop in and get the crop out. Strong global demand for West Australian grain is there. We've seen it since 2008. Despite global supply and demand, they want West Australian grain. And we've had very small carryovers of last year's crop into a next year's crop, regardless of crop size. They want to ship it, they want to get it out. And so that's exciting for the grain industry. I'm very excited about where we're going to be in the next 5 years. We're going to invest more than just another $850 million in the next 10 years. Like I said, we'll take that plan to our executive and our board towards the end of this year. And that's going to be the blueprint for the supply chain of getting grain out of Western Australia for the future. Thanks very much.